Our headline story, African Finance Summit. Yet another Africa conference, yet another gathering of African leaders outside of the continent. But can this one make a difference in a post-COVID world? Africa's leaders are in Paris for a summit. French President Emmanuel Macron is hosting a summit with African leaders, other world powers, and international lenders on how to ease the financial insolvency of Africa and chart a path of economic viability. And as today's conversation is focused on recovery, we'll put the spotlight on some stories of rebound happening across the continent. I'm Tolulope Adelere Balogun. Welcome. This is Business Edge. In April this year, French President Emmanuel Macron called for a new deal to help African countries. And now he is hosting the Summit on Financing African Economies on Tuesday. The hybrid format summit, both face-to-face and by video conference, will welcome some 30 heads of state and government and leaders of international organizations. The aim of the summit, according to LC, is to put in place financial resources capable of reviving the economy of the continent. Africa has seen only about 130,000 deaths from COVID-19, according to official figures, but the continent's GDP is expected to experience its first recession in 25 years this year. Growth should return to positive territory in 2022, but at a lower rate than in more developed countries, with a risk of divergence. Now, joining me is Nasir Afolabi Abolaya, News Central's business editor, to take a look at yet another conference and another summit. Nasir, welcome to the show again. Thank you so much for joining me.
Great to be here.
So we've talked about the China-Africa Summit that held. We've talked about the Russia-Africa Summit or the Moscow-Africa Summit as well. Everyone is having some kind of meeting with African leaders outside of the continent to find a solution to Africa's economic issues, some of which they have contributed to. But do we really expect that this will make a difference?
As much as the previous ones. That's the reality. Because these are solutions brought about by external actors. Now, the real solution has to be homegrown for it to be sustained. And it being sustained is a major part of the discussion, which unfortunately is not really what most of the world leaders are looking. Right now, they're looking at just ensuring that there is more cash available. Not a bad thing in itself, true, solvency. But how has this funds being spent? There's a major question which needs to be asked. Now, why are we still borrowing more? Now, there are particular interest rates which all African nations have to pay. That's the premium. It is something which needs to be really checked. Now, of course, this discussion, we'll discuss that, and it's just for this COVID-19 period. Now, after all the vaccines have become more effective, of course, we have more vaccines coming out, and the real normal or the new normal becomes more normal. Yes, things may go back to the era of increased premium. Then what happens?
There are a lot of questions. Sorry to interrupt you. There are a lot of questions. We talk about the solvency situation as well, and all the data, all the records show us that even with aid that comes into the continent, capital flight of what leaves the continent, so some of these countries, is much more than what Africa takes in. So even when we talk about where the money is going, it's going back to some of them at the end of the day.
Most of them, not just some of them. Because whatever investments they bring, the interest, the profit goes back to them. So what really is happening to Africa? Africa is just being raped on both sides. Now, money comes in, we extract minerals here. And where are they being processed? Outside of Africa. And now Africans now pay for the end products at much more higher rate. So it's not a win-win situation, it's a win-lose situation. So the solution has to come from here. Now, the value chain of all these industries, from the agriculture to the mining, to the petrochemicals, need to be in Africa so that Africans can benefit. If that is not happening in any discussion, then it's just the same talk shop.
All right, so we're hearing that the summit is hoping to improve the solvency of African nations. Now, we know that Zambia became the first country to actually basically be unable to pay back its debt. So the next question then has to be, how solvent or insolvent are many African nations at this point in time? Because of the pandemic, or they were going to eventually get to this point even without the pandemic? The pandemic just helped to speed it along.
The reality is many nations were already broke. I mean, they're just teetering on near bankruptcy. The pandemic just speed things up. The data is there. South Africa, Nigeria, these are the poster child of what is happening. Fine, some of these countries are doing quite a lot to try and revert the situation, change the narrative, but it is just not enough. Basically because we are still not exporting enough. Well, South Africa is really doing what they can. Of course, we know that the power sector, that is electric sector, has really crippled the manufacturing sector there. Now, the same goes for Nigeria. Even before the pandemic, what are these countries exporting? These are the major yardstick. That is why the exchange rates of these countries have literally gone down the drain. Foreign reserves have been spent because they are not earning enough to show up, to really buffer the economy. So really, the nations were truly sick before the pandemic. Pandemic just really nailed the coffin.
Okay, so nail in the coffin is what seemingly is going on. So you talked a bit about how the insolvency issue can be solved, and that's about addressing the premium rates that is paid on the interest rates for many of the loans that come to the continent, but also addressing the issue around the value chain of what is produced here, taken abroad and then brought back. So let's talk about some of the major players that are involved. Now, China is a major player when it comes to any debt conversation concerning the African continent. And some have said it has to be included in any meaningful dialogue. So whether we go to China for this or we're in France for this, somehow China is part of the equation. So how far, what do we know about China's involvement in the summit for financing African economies?
Well, nothing explicit has been mentioned. Physically, I'm not sure China will be there. Possibly, maybe they may join virtually. You know, last year on the G20 summit in Saudi Arabia, China joined virtually. But unfortunately, there was no concrete agreement on how much debt relief they will give. Debt forgiveness was totally off the table. That would not happen. But relief is what literally all African nations. I remember back then, South African President Cyril Ramaphosa literally asked for it, that if you cannot forgive and cancel the debt, but at least give us time to rebuild our economy. Well, a good number of that has happened, but not really for everybody. You literally have to ask. But unfortunately, it has a negative impact. Because now rating agencies literally came out that every nation that came out to ask for debt relief will be downgraded. Unfortunately, that already happened to Ethiopia. But we are expecting more of it to come. But all these nations can still bounce back by strategically ensuring that more export over time is increased. Now, with this, it's just a matter of mathematics. As you export more goods out, you are earning more. So with this, you will be increasing your revenue base, increasing your foreign exchange. So it should be a win then for African nations. But the first thing is literally increasing our export. Mining sector, increasing the value chain, agricultural sector, make sure that you have more products, more varieties. Now, some nations will be able to do this categorically. Looking at the Southern Africa bloc, yes, most of them have signed some pacts or the other with United Kingdom after Brexit. So they will be able to say, is this. Now, the Eastern Bloc also led by Kenya seem to have a sort of soft landing, but only Kenya has formally have an agreement with the UK. So these nations, yes, can say breathe a sigh of relief. But what about the other countries in Sub-Saharan Africa?
And I think it's a conversation in terms of sometimes when we had the Moscow Africa conversation, I remember one of the feedback was, let's see African countries come to the table as one entity in terms of whether it's renegotiating debt financing or debt forgiveness. But we have pockets of these conversations happening across the different countries. But let me take you up on something. So many people are very skeptical about the fact that France is hosting this summit and seeking to lead the charge for this economic recovery, given the country's history on the continent. So do you think France is really poised for this? We've had the conversation around the ECHO, as it may be, and French, Anglophone and Francophone West Africa, Francophone countries, as it may be, and sort of their ties to the French Treasury or the French Treasury's ties to them. Is France really in the right position to be driving this?
Well, in France's best interest, yes, they are. Because it is still a function of France protecting its interests abroad. You mentioned something that's very, very important. Francophone and Central African countries have their treasury, half of it still held in France. So with this, they don't want these countries to go further in depth because it will affect their own viability. So it's in their best interest to ensure these countries are viable, make money, so they can still keep a part of it. Now, I know some nations did want to pull out, Central African nations in particular, but nothing really happened.
It's been about a year now. We haven't heard anything.
It was just all talk. When Emmanuel Macron came down, some deals were struck there that we were not privy to. After that, a name was stolen from ECOWAS, the ECO, as their new currency. And that was the end of it. Even that currency itself is not really in place. So it was just all talk. Nothing concrete is happening. It's still the same old regime that is still happening, the same old monetary system. So I don't foresee much really happening unless each nation literally has an agreement, which is what has been happening since last year. But a collective thing, as was mentioned in Moscow, will not really happen because each nation has its own peculiarity, its own needs. And even the debt that each nation has is quite different.
Okay.
So coming together is not really viable.
So let me take you up on one more thing before we go for a break. So one of the things France is proposing is that there should be a reallocation of the IMF, International Monetary Fund, special drawing rights to Africa. These are basically foreign exchange instruments that can be used to finance imports. Now, the IMF is expected to decide in June on a massive SDR issue of $650 billion, which includes $34 billion for Africa and $24 billion for sub-Saharan Africa. Do we expect this proposal, this whatever it is that France is saying, this is what they want to put their money behind in a way, do we expect it to fly with the IMF when they meet, which of course involves China?
It will. No, the funny thing, the real thing is now France has a say on whoever heads the IMF. That has been how it has been from the beginning of the IMF. Just like the United States determines who heads the World Bank. So they have a literal say.
Stake.
Thank you. Now, aside from this, since they are one of the nations who owns the SDR that is being used, they can determine who gets what.
They can influence. Because they're not the only one putting in for the SDR.
I know they're not the only one. Sweden, the UK, yes. But the quota matters. And since they have a large stake there, they can really determine it. But they won't come out and say, we are saying this person gets this. But each nation still has the rights to apply, to lobby. And many nations have been doing this. Uganda, Zambia. Uganda has an approval already. Zambia is still there. They are still having dialogue since last year. Nothing has happened yet. Now, many other nations are still talking. Well, I believe that with this summit, yes, something will happen. Every nation will get something out of it. That's a reality. And with this particular agreement, there shouldn't be any premium on these particular loans, which is a good thing here.
Let's see what happens because this summit is expected to start tomorrow. And we know some 30 African heads of state and government are expected right now. Nigeria's President Muhammadu Buhari is already in Paris for this summit, and we're expecting other world powers as well as international lenders. And we'll see what comes out of it and touch base with that. But there is more recovery news coming your way right after this. You're watching Business Edge on News Central. Stay with us. As African leaders prepare to meet in Paris, France, to discuss Africa's recovery, the continent is starting to bounce back from the economic breakdown induced by the COVID-19 pandemic and subsequent lockdown. We take a look at Africa's recovery in Africa's rebound. And after that, you'll also quickly see what's happening with the continent's most industrialized nation, South Africa, which has been facing some tough times, high unemployment numbers, an ongoing recession, and a vaccine rollout program that has not really rolled out as planned. Take a look at this.
The rise in the cost of cement has increased the revenue inflow of cement makers in Nigeria. Dangote Cement, Lafarge, WAPCO, and Bois Cement Nigeria's largest cement makers recorded a combined profit growth of 37% in the first quarter of 2021. The trio recorded a combined profit of 121 billion naira in Q1 compared to 88 billion naira recorded in the same period last year when Nigeria was in lockdown due to the coronavirus. The companies grew cement sales 27% to 465 billion naira in Q1 2021 compared to 366 billion naira in Q1 of 2020. According to the International Cement Review, retail cement prices in the country reportedly rose from around 2,400 to 2,600 per 50 kilogram bag last year to 3,500 at the end of April. The African Development Bank Group has cleared about $413 million in arrears on loans owed by Sudan, following the approval of the proposal by the boards of directors, as this will enable the country to have access to new financing. The clearance of Sudan's arrears was aided by the United Kingdom's bridge financing of $208 million, Sweden's grant financing of about $4.2 million, and the Republic of Ireland's commitment to providing €150,000 towards Sudan's future debt service. Consequently, the bank has lifted sanctions on Sudan and is providing a policy-based operation to the country as part of the continental lender's re-engagement with Sudan to complement its ongoing operations. The bank group's current portfolio in Sudan comprises 19 operations for a total commitment of about $600 million, spreading across sectors like agriculture, water and sanitation, social and energy, and the private sector. South African growth indicators for April saw the highest and fastest growing on record, signaling a strong economic bounce back to pre-COVID levels, according to the BankServe Africa Economic Transactions Index, BETI, for April. BankServe Africa is an automated clearinghouse located in Johannesburg, South Africa, and operates both nationally and within Africa. The BETI increased by 25.9% year-on-year in real terms, boosted by current higher commodity prices. The headline BETI is a reflection of the economy's recorded changes annually. However, with the lockdown impact from April 2020 distorting the numbers somewhat, the short-term variations were important to observe, BankServe Africa cautioned.
South African private sector activity has expanded at its strongest rate in 9 years this past April. IHS Market Purchasing Managers Index PMI rose to 53.7 in April from 50.3 in March, staying above the 50 level that indicates an expansion. Now, Pan-African Media explains what led to the growth.
I think we'll all understand that the pandemic disrupted the economic activity last year. It's on the rise. Confidence is beginning to improve, and export demand is also happening. So we'll see that firms are beginning to open up, even as they adhere to the COVID-19 regulations. But firms are ready to go back to business, and economic activities obviously will improve.
IHS Markit said firms indicated that demand had improved strongly at the start of the second quarter. But South Africa has a significant decline in her working population, while Africa's most industrialized economy employ other Africans to meet her labor needs.
I think, as a leading country on the continent, South Africa has improved in its policy, and it's also improving in its policy day after day. I don't think South Africa as a country will shut its doors to other African countries, especially if they're bringing in skills. In fact, there are policies that are in place that skills are needed, and if you go through the right channel, you will be able to do your business, whether in the private or in the private sector. Let's stick to that.
The road is becoming clearer, and the various activities of the Cyril Ramaphosa government seems destined to bring South Africa out of recession and to more prosperity.
And that's a quick look at how recovery is panning out in some areas across the continent, and cement being one of them. That's a conversation we had with financial analyst Benjamin Atol Kwanzaa, who joined us from Accra, Ghana, as we looked at some of the developments there. And we also saw what's happening with South Africa, the nation that is the continent's most industrialized, trying to find its way out of a recession, high unemployment numbers, and vaccines that are not rolling out as they would have hoped. Nasir, any last words on this before we wrap up? And of course, you can catch the rebound also on the Business in the Evenings on Friday, just giving you some bright spots in the economics of the continent.
Well, literally, it shows that Africa is really solving its problem internally and really making amends for what has happened the past year, as 2020. I believe and know that, yes, Africa will make a rebound. 2020, we're much better. 2021 is still here with us, and we are coping and we are improving, striving. We will make it. We'll make it well.
All right, we'll make it well. We'll make it work. What happens when our leaders meet foreign leaders and discuss our economies? Whatever comes out of the summit on financing African economies, we will definitely be breaking it down right here on Business Edge. It kicks off tomorrow in Paris, hosted by French President Emmanuel Macron. Nasir Afolabi Agboola, thank you as always for joining me.
Here.
And as we wrap things up, let's give you a bit of a few stories we are keeping our eyes on as the day develops and the week does as well. Now we start in West Africa, where the latest figures in the financial and operations report of the Nigerian National Petroleum Corporation have shown that the imports of premium motor spirits, also known as petrol or PMS, by the NNPC rose by 100 million liters, following the dormancy of Nigeria's refineries to refine crude. Now, the NNPC is the sole importer of petrol into the country, and the corporation manages the country's refineries in Kaduna, Port Harcourt, and Warri. The pump price of petrol has gone up by 3.56 Kenyan shillings per litre, while that of diesel and kerosene will remain unchanged beginning midnight of the 15th of May 2020 all the way through to the 14th of June 2021. I beg your pardon. The latest figures from the Energy and Petroleum Regulatory Authority, the average landing cost of imported super petrol decreased by 0.57% per cubic meter in March 2021 to 488.69 per cubic meter last month. Going to the southern part of the continent, Eskom is implementing a nationwide scheduled power cut from 1700 local time until Tuesday due to breakdowns at 7 of its power plants in the last 24 hours. Now, Eskom said in a statement that the breakdowns at the 7 plants represented a total loss of 6,044 megawatts, bringing the total unplanned capacity loss to 16,118 megawatts. And finally, the Suez Canal Authority announced that it would widen the canal by 40 meters between the city of Suez and the Great Bitter Lake to the north. This project will also deepen the canal by 20 to 22 meters. Now, nearly 50 ships pass through the Suez Canal every day, and an expansion would permit two-way traffic in one section and more ships to pass through overall. On March 23rd, that is, the Ever Given, a 220,000-ton container ship, miscalculated its approach into a narrow portion of the canal and disrupted global trade routes until March 29th. Experts stated that the 6-day blockade would have a ripple effect, causing disruption for months to come. And that's it on this edition of Business Edge. Don't forget to follow us on social media. We are at News Central. Head to our website, www.newscentral.africa, and download our mobile app on Play Store and the Apple App Store. Until next time, I'm Tolu Akwe Adelaru Balogun.